Hello, trading is closed on January 16th, 2019. Let's go over our calls. We thought yesterday's action was positive. All we had to do was promptly take out this high, and we should get higher prices. And that's what happened. Longer term, we said there were a number of targets for the end of this rally. They were as low as 27.50. And as high as the 2800s. Look for the pattern with the early low, which is what we got. Tomorrow's pattern has the early high. Most of the time it's an all-day rally, but when it fails, it drops in a straight line. During the day, we got a buy signal. MEJT said the rally wouldn't stick, and we got the retracement. This is not a healthy pattern. We gapped up, hit a new high, hit a higher high, closed under all these highs. Unless we take this high out early, lower prices should print. And that isn't all the bad news. Here's 9 bars up. We have a DeMark setup. And typically, this is a common place for a reversal to occur. It doesn't help that we have what candlestick aficionados call a shooting star. If we start down tomorrow, makes a nice end of this leg, not necessarily the whole rally. Here's a chart from yesterday. We've drawn in the 1x4 Gann fan line. We hit it at the nose, on the nose, right at the high. This was a chart we had when we called the high back in September. It took this high and that low. That distance was 50% and 100% was right here. You can see at today's high we're right at the Fibonacci 38.2%. So we have tons of resistance here. Now I can't really make this this number 27.50 work exactly. It's the line we had yesterday with this count, but this isn't the only way to count it. It's possible to count wave C as a 5, 1, 2, 3, 4, 5. And the advantage of counting it that way is impulses tend to be waves 3, not C. And if you do have a strong impulse like that, wave 5 typically truncates. There's also an advantage that this whole rally counts as a wave all on its own. So if that's the count, 1, 2, 3, 4, 5, you can see that the current rally to 61.8% retracement of this whole decline. It also hits a trend line formed by the lows leading up to it. And there's also the 50-day moving average. I'm not saying it's the end of Blue B. I think it's a bit short. It's probably the end of A of B. And if we drop, if the count's right and we drop, we still have the potential to go higher. But there's a whole lot of resistance at today's high. And the rule when you rally into resistance like this in a straight line is either you gap over it tomorrow or resistance wins. If we gap over it, we've overcome strong resistance, we have higher targets. But if we don't, could have real trouble. The daily pattern tomorrow tends to be an all-day rally, but when it fails, it tends to drop in a straight line. And if we drop in a straight line, it's hard to make an exact target, but it wouldn't surprise me if we went into this fourth wave, which is 100 points lower than today's range. And if it's a straight line, it might not take a long time to get there. So We have resistance at today's high. We either clear it by gapping over it or lower prices print. And if we start dropping in a straight line, we have much lower targets on the downside. None of that means this high is going to hold forever, but if we start dropping, it could hold for the very short term, and there could be a serious drop. That's today's call.